It's often assumed that credit card rewards are free. They're not. Every point and every mile are funded by money that is already moving through the payment system. Take a simple purchase. A customer pays a merchant $100. Before the merchant receives anything, a small slice, often around $2.50, gets removed. That's the cost of accepting the card. And because most merchants don't adjust prices based on which card someone uses, they raise prices across the board. This means part of the cost of rewards is embedded in the prices paid by everyone, including cash and debit users. The price tag doesn't show it, but it's built in. Those fees don't stay with the payment network. Visa and MasterCard keep only a small portion of the fee. The larger share goes to the issuing bank, the one whose name is on the card. They fund the rewards, handle fraud losses, and earn interest when someone carries a balance. Interchange, the fee banks collect every time someone uses a card, is the engine behind rewards, and premium cards generate the most of it. Banks want cards with higher interchange because those cards bring in more revenue. Networks want banks to be happy because banks drive transaction volume. And airlines want banks to buy miles in bulk because selling miles has become one of their most reliable revenue streams. Delta Airlines, for example, received nearly $7 billion from American Express in 2023 just from mileage sales. In some cases, loyalty programs can rival or even exceed the profitability of airline operations themselves. But none of these rewards work unless someone ultimately funds them. And the people who use these cards aren't all the same. Some pay their balance in full every month. They generate interchange but pay no interest. Others carry a balance, thereby generating both interchange and interest. A revolving borrower with a few $1,000s of debt can produce more profit for a bank than a high-spending transactor who pays on time. Both groups earn rewards, but revolving borrowers often contribute far more to the system's profits. Rewards also influence how people use their cards. Annual fees can create a sense of commitment. Once someone pays a high annual fee, they often feel pressure to get their money's worth, which can increase how often they use the card. High annual fees also tend to attract wealthier customers who spend more and default less, another reason banks like premium cards. There's also the question of how cards affect spending decisions. Researchers at the Massachusetts Institute of Technology studying purchasing behavior found that paying with cards can activate reward-related pathways in the brain, the circuits tied to anticipation and positive reinforcement. This may help explain why card spending often feels easier than paying with cash. And when spending rises, the revenue generated from each swipe rises with it. For years, card network rules also made it difficult for merchants to steer customers toward cheaper payment methods. Rejecting premium cards risked losing high-spending customers. And offering different prices at checkout created friction most retailers wanted to avoid. So the higher-cost cards stayed in circulation and the fees stayed embedded in prices. Outside the United States, this looks very different. In the European Union, credit card interchange is capped at 0.3%. In the US, premium cards often run 8 times higher. Same networks, same banks, different rules. And the difference shows up in rewards. European cards offer modest perks. American cards offer airport lounges, travel credits, and points multipliers because the underlying economics can support them. Researchers at the Federal Reserve found a consistent pattern. Reward systems tend to shift value from lower income and less educated areas toward wealthier and more financially sophisticated consumers. Their estimate, roughly $15 billion a year. None of this means rewards are bad. It means they're not magic. They're a rebate from a cost that's already built into the price of almost everything you buy. If you want to benefit from rewards without paying for them, the path is straightforward. Use a rewards card, pay the balance in full, avoid carrying debt, and choose cards with perks you'll actually use. If a card has a high annual fee, make sure the value you get exceeds the cost. And remember, points can lose value over time. Airlines can raise award prices whenever they want. Rewards can be a useful tool. they can also be an expensive one. The difference depends on whether you're the one earning the rebate or the one funding it. If you enjoyed this breakdown, consider subscribing for more videos explaining the hidden systems behind everyday life. No annual fee required.